Clouded by bias. We simply want to see where the toxic order flow is coming in and where it's going out. So let's take a look at volume as it drives price. And here's an example of it here. This is volume as it drives price. Take a look at the volume surges and mark them on the screens. There's a volume surge from that high there, and there's a volume surge from this low here. That's it. Bearing in mind, I don't want to mark this one because this is this morning's business, so we're assuming that you don't know that, and this is all you know. So we can see the last buy volume came from here. The last sell volume came from here. That's the volume. That's the toxic order flow, right? The best toxic order flow. If we know that that's where the toxic order flow came from, because we can see that that was where the drivers came from, we can then take these two signals and we can mark the screens. Let's take a look. Okay, by taking the signals and marking the screens, you're able to recognize that I've now got two key price areas. The first key price area was this toxic seller here, which I now mark on my screens. And the second trade was obviously this toxic buyer that came in here, which wasn't a low. The low came in here. So I've now got my buy area. These are two toxic areas to do some business into. Two toxic areas. So what happens next? Well, obviously, if we go to the right-hand side of this toxic order flow, we can recognize that we trade into that toxic order flow just here. And obviously, the price tops out and sells away from that price area beautifully, right? When we look at the toxic order flow at the bottom edge, we can see that we trade into that toxic order flow at the bottom edge. This is 3 o'clock in the morning. It's not exactly the time of the day to trade euro dollar, but let's see what happens next. When we come into the Frankfurt market open here, we're already aware now that this is the toxic buy zone, and this is what happens next. We trade almost to the toxic sell zone, and then we trade back into the toxic buy zone, and we've had two more buy opportunities coming away from those two prints, there and there. Does the toxic order flow always stay in the same place? Of course it doesn't. If it did, that would be a little bit stupid, wouldn't it? A little bit crazy. By the way, dealers are still short this S&P NASDAQ narrative, Dow Jones narrative. Still short the Dow Jones pullback trade narrative. It is on pullbacks, however. There isn't any particular value divergence on these trades, so it is just the macro value just now suggests selling down into value just now from level 2 liquidity makes a little bit of sense. So we can see that this idea of toxic order flow makes a lot of sense. Now, it wasn't just the euro dollar this morning that gave us a piece of information to that effect. If I look at the gold market, for example, and I said to you guys, right, mark off the toxic order flow from gold. Take a look for yourself. Take a look for yourself, guys. That sales worked out rather well. Thank you very much for that, Dow Jones. Well done, anybody that's on it. A little quick sell into it, and it's a nice drop down. Another bit of profit, guys. Another bit of profit. Okay. Still selling upticks just now in the Dow Jones if anybody's interested. So this is what we call toxic order flow. Okay? This is what we call toxic order flow. When we see volume surging, that's it. That's toxic order flow. You could argue that there were small toxic elements coming into the markets here. And again, here as well, you can see that there was definitely some toxicity coming in from these areas. And these are all prices, but the main toxic order flow came from here. Well, guess what? All you do is you mark it on the charts. All you do is you mark toxic order flow on the screens, don't you? Why do you do that? Well, it kind of makes a little bit of sense why you do it, because, of course, you want to know about where the toxic order flow is coming from. So let's see where this price came from, right? So what we do is we go along to these areas and we start marking them on the gold markets, right? So if we go along to the gold market and we start marking these prices, well, first of all, your toxic order flow, and I'll mark it as an area, your toxic order flow came from here. Well, look at all of those sellable opportunities right through there this morning, very early this morning. Is that not a great possible area to sell into? Damn right it is. Absolutely damn right it is. Absolutely correct, right? Hold on a second, that little cell's made some money. So we are in the Dow Jones at 892, currently trading 883s on the market maker storyline just now, guys. Market maker storyline. So that would have been a great place to start thinking about toxicity. Where else? Well, we saw that there was toxicity coming in at this price. So that's another toxic area that we want to mark off in our charts. And where else? Well, we see the final one came in here. All these three uprights were simply marking toxic selling. So we can see another one coming in here. What price? 1882s. What happened at 1882s? What happened at 1882s was we sold once. We gave out the level to everybody in the room. We sold again. And this is what happened. We got a sell from 1882s, and the price ultimately is traded all the way down to 1864s, but that was after the short value came back in here on the short side. Now, what's that done to toxic order flow? Well, it's obviously with the value coming in, we already know what it's going to do to toxic order flow. It's created a new level, hasn't it? It's created a new level. So there's the two levels that we want to mark on our screens. The toxic level here, that was the first toxic level, and the second toxic level there, the highest print from the toxic price level. Understand? So these are two levels we must mark on our screens. So if I mark those two levels on our screens, what happens? I can see that there's a level here where that toxic selling came from, which I should be aware of. The toxic selling came from here. And that's where that price got jammed up here. And the second toxic level came from here. And obviously from that information, you can see that this becomes a very definite toxic sell area right here. And obviously from that, you got this massive surge sell side trade. It's kind of crazy, isn't it, when you start marking off these toxic areas? It gives you some real quality signals to start just reminding yourself about. Whether you want to trade them or whether you don't, it doesn't make any difference. At least you know about them. So make sure you always mark your toxic levels on your screens, guys. Always.